The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Masters and treasure hunters, welcome to the June 2nd magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a great weekend. My outcome for you this morning, as always, well, it's to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. What I like to call the 9 rules of the universe. The universe says to us on a continuous and ongoing basis, number 1, hey, if you don't move, I won't move. Or said another way, if you sow, you can reap. But first, you've got to sow. Number 2, it says, hey, unless you change what you are, you will always have what you've got. Number 3, the way you do anything is the way you do everything. Something to think about there. Number 4, leaders are readers. What was the last book you read? When did you last read it? You see, it's not what the books cost, it's what it will cost you if you don't read them. Number 5, don't say if I could, I would. Say, if I can, I will. Number 6, wherever you are, be there. On your way to work, be at work. On your way home, be concentrating on home. Number 7, don't set your goals too low. If you don't need much, you won't become much. And number 8, happiness is not something you postpone for the future. It's something you design for the present. And finally, the universe, rule number 9, time. Time is our most valuable asset. Yet many of us tend to waste it, kill it, and spend it rather than investing it. Folks, thank you so much for investing your time with us here at TFNN. Respect the rules of the universe, and they will respect you. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading down 28 points, trading out at 16,685. S&P off 7, trading at 1917. Composite down 33 points right now, trading out at 4208. Russell 2000 off 1%, down 12. We'll go check in on those stocks for sure. Leading the charge to the upside, you've got Procter Life Corp, Protective, not Procter, what am I thinking? I'm thinking Procter & Gamble, reading Protective Life. PL is a ticker symbol, up a nice 11% this morning. NPS Pharmaceuticals up $3 and change, up 12%. Alliance Data Systems, ADS, up 1%, up $2 and change. Cons Inc., CONN, up $3. Allegren, up $3. Broadcom, up $2.30. Jumei International Holdings. I was going to say Junmai Daiginjo, but that's a nice sake flavor out there. But Jumei International Holdings, that's up 6.5%, up $1.78. Oil States International down $46. That must be some kind of stock split or something out there. Puma Biotech, I would hope so. Puma Biotech is down 22% this morning, off $17. Priceline down 14. Google off 14. Biogen BIIB off 7. Intercept Pharmaceuticals off about 7. LinkedIn off about 7. Clovis Oncology down about 6. And Tesla Motors off 5. Our call number is 877-927-6648. Give us a call, folks. Happy to field your questions. Look at a stock chart with you, answer anything that I can. Let's start out by taking a look at the index. Let's see what we've got here in the S&P 500. What I've got, if you watch this on Tiger TV, it's my Rhodes Momentum Indicator strategy signals out here. The weekly chart is on the upper portion of the screen. The daily chart to the downside out here. If we take a look at the daily chart, wouldn't take much to form a little bearish engulfing candle out here. That's just simply, let me get my cursor out here, just simply because of Friday being such a narrow-bodied candle out there. So it closed today below the price of 1923.87, sets up a little resistance area, meaning today's high would be the resistance. Support is likely down here at the 50-day exponential moving average, a pullback that would take it to 1878. That would be a really nice buying opportunity if, in fact, the bears can drive the S&P down to that level. It's been tested a few times after coming out of this little rising window, this little gap up on April the 17th. It was tested back on April 29th. That proved to be a buying opportunity. It was tested again May 8th. Proved to be a buying opportunity. Again tested on May 16th. Tested again on May 20th. So that should be the level that one would be expecting price to, if it can push down there. That would really, looks like right now, just looking at the chart, a nice buying opportunity. And that is in the area of about 1878. It's trading at 1917 as we speak right now. Oftentimes you don't get what you want. Somebody should make a song like that, huh? If we take a look at the NASDAQ Composite, it's trading out at 42.12 out here. A little hanging man candle on Friday. Some people might trade that as a bearish candle, some people will treat that as a bearish candle. Some people might even sell the market short on a candle like that. Not you and I. We know that that might look bearish, but you can't figure it out. I think the Japanese, when they came up with the hanging man, they were just simply trying to fill a page there. I think they had a little bit too much sake. I know what that's like. And maybe at that stage you can say, hey, what are we going to call this hammer candle, or what looks like a hammer candle up at the highs? Hey, let's call it a hanging man. And I think they should have just stopped there. It is got bearish connotations to it, but you go back and you take a look at it in the stock chart, and you might as well just kind of ignore those candle sessions out there. In any event, the NASDAQ Composite, its 50-day exponential moving average line is around 41.53 out here. It's trading at 42.13 as we speak. So a pull back into that area. That would be nice. Now, unlike the S&P 500, which tested its 50-day exponential moving average, that was acting as an area of resistance for quite some period of time inside the composite. We'll see if that can act as support. Again, the number is 41.53 and a bit of change out there. That's on the composite. If we take a look at the Dow Jones Industrials right now, off about 20 points out here. It had in the Dow futures contract. We looked at that during the first hour, up above its resistance level. In the index itself, the cash index, resistance really is the bearish engulfing candle from the week of, I should say, May 19th, and that's a high of 16,735.51. We hit today a high so far of 16,740. 16,740.58, and the high out here was 16,735.51. So it has tested the high, rejected it, and is trading back inside the lower part of its range out here. 50-day exponential moving average inside of the Dow about 16,473. Let's take a look at the transports. Let's go see what the trannies are doing here this morning. They're trading out at a price level of 8083.24 is where they are trading at. The little doji candle appeared on the trading session on Friday out here, but it's still a nice strong move out here inside of the transports. Its 50-day line is at about 77.38. Inside the NDX 100, let's take a quick peek at that. The NDX 100 right now, it's trading out at about 37.15. It, too, forming a doji candle on the trading session of Friday out here. Let me pull this back here. No, it did not. So I don't think it did. Let me see. The low of Thursday, write this down for me, would you? 37.1609. The low of Friday, 37.07. 37.16. You know, it's interesting. I noticed that the Qs had formed the same candle formation on Friday, and I didn't go back. Maybe I had too much sake when I went back and checked it out. But the NDX 100, as I looked last week, I looked all weekend, I should say, for the largest, what was the largest bearish signal that I could find in the markets? And it was inside the Qs. Well, apparently it's also inside the NDX 100. Hey, silly, that makes sense, doesn't it? And what is it? Let's do this here. Let me do this instead. Let me switch over to this chart. Give me a moment here to pull up. We're going to pull up the daily chart, and then they'll blow it up on my screen just a bit more. Now, it's the monthly chart that'll come up first, but let's go switch over to the NDX 100, and then we'll switch over to the daily chart out here. because it's just simply worth noting. And it's just the only bearish signal. Now, here I can see it for sure. Let me make sure. So the low, 37.17. Last week was 37.16. Yeah, okay. So you probably at this stage already know what I'm looking for. I've sort of given it away. And that's this. When you take a look at Friday's candle session, the high and low was exceeded of the prior day. And you can see, and that's why I had to blow it up on my screen. I remember looking at it on Saturday or Sunday when I was looking at the Qs, and you can see it had a little bit of a lower close, right? A little red body candle. Now, red body doesn't mean bearish; just means the close was below the open out here. But in this case, this actually qualified as a key reversal session out there. Now, key reversals are supposed to mean something, and if today you see a close above Friday's session out there, what it means is, man, such a super strong bullish mode that is going on inside of the marketplace out here. See, the only real bearish pattern that I was able to identify and locate was Friday's session inside the NDX 100, inside of the Qs out here. If we take a look at the Qs themselves, let's go do that as we speak right now. We'll pull up the Qs. It's more clearly visible. You can take a look at this on your screen. You can see the Thursday low, May 29th, that was 90.86, and the high 91.31. Whereas Friday, it was 90.83 as a low, the high 91.45. So on a session here, you exceeded the high and low. It closed in the opposite direction, and we came from an extended condition. Now, that extended condition, in this case here, being A to B equals C to the upside, that pattern here looks like this. Here's your 1 to 1.272 A to B equals CD. It hit it like Johnny on the spot. I don't know where that one came from, but since my best friend's name is Johnny, I can go ahead and say that all day long. What we also saw was a 100% move of a move that was getting back to the swing point for March the 7th out there. And we also can see that from the 14-period relative strength indicator, it was in the bought zone out there. So you got three reasons to qualify this as a key reversal session because of making sure that we apply that extended condition to it. So what does that mean? Well, the Qs let us down. The Qs have let us back up. Now what are the Qs? What's the NDX 100? What is the NASDAQ going to do for us? So inside the Qs, that's what we're looking at. Let's go back to the indexes here. Let's take a look instead of... Give me a moment here, folks. Need to get a lot of water in my throat out. Let's take a look at the New York Stock Exchange. Let's pull up its daily chart out here. Nothing, nothing bearish about this candle formation as we speak here right now. The NYSE trade out at 10,750, 302. Daily chart looks extremely bullish out here. Let's go take a look at the Russell 2000. Maybe a little bit different case out here. Russell 2000 did form a doji on May 29th, a little bearish engulfing on Friday. The leaves were falling off the tree. The key level, let's go see, where is it that the NDX 100, the Russell 2000 may trade down into. We might have to do this when we get back from this breakout here. Let's see if I can find it real quick here. Where's the Russell? Come on, where is the Russell? Here it is. It looks like we're going to have to wait till the break is over. When we get back from the break, we'll go take a look at the Russell 2000, trading inside the gap that was created on May the 27th. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 13, S&P down 4, NASDAQ Composite up 20. Got crude oil down 20 cents right now. Silver's up 6 pennies. Gold is relatively flat out here, trading out at $12.46. Let's go out to one of our favorite cities and favorite people, John in Philadelphia. John, thanks for calling. Thanks for holding. How you doing this morning? How was your weekend?
Steve, it was excellent. How about yours?
It was great. It was great, and other than them starting the game a little too late last night, meaning the Game 7, and then going to overtime and having to stay up too late, it was great. I don't know why they couldn't have played it a bit earlier.
God bless you for staying up those late hours. Say, Steve, I wanted to ask you about short-term entries on the NASDAQ 100 index, the NDX. It's currently 37.20. Steve, just by way of backgrounder, I got a signal back on, it would have been the 19th and 20th on a breakout that the NDX would rally. It rallied strongly. Apple was a key leader behind that NDX advance. I went flat, got out of longs as a trader back last Wednesday at the 37.20 area,
yes,
figuring that the NDX, I was actually thinking I wanted the NDX to prove it had the power and the buyers were there to drive NDX over the March highs. That was 37.38. Well, we got to 37.42, just over the March highs by a smidge, got there last Friday. Now we've pulled back Steve, I see the NDX as being bullish unless 3625 is broken. I further see a nest of support that I'd be thinking about buying into the 9-day exponential moving average, and there's a gap from last Tuesday.
Yes.
Kind of like 3690 to 3680. We're currently 3718. I'm wondering, does your work show either a pattern, some technical lever, price calculations that lead you to have some degree of certainty as to where a low-risk buy on NDX is?
Well, the answer to your question is yes. What I've been waiting for, so number one, great trade first, by the way. So congratulations to John on that. And more important, what I want people to really wrap their head around what it is that you said. You had a plan, you got in, and you had an exit strategy. And you went ahead and you took your profits off the table. And, and well done there. And especially with the NDX itself, the NQs making 100% move of a move, and as well as many other things out there, that's just great. So nice going there. With regard to trying to figure out now, as long as certain levels aren't violated, you're still looking at long entries versus trying to play a short entry out there. What I'm watching closely, John, is the 120-minute time frame. Is there a time frame that you use, though, for shorter term? Do you go down to a 30 or a 60-minute chart in the NQ? Or what time frame do you typically use, if at all, for where you, because you're going to see a market turn in a shorter term time frame versus a longer? Do you do that at all? Anyways,
I sure do, Steve. Your 120-minute benchmark, I look as well, and I was curious to see what jumped out at you, given that time perspective of what would be the conditions under which you'd buy, and if you saw the setups where you might place your stop losses.
Yes. Okay. So in the case of the 120-minute charts, I've been watching the Nasdaq, the Dow, the ES Mini because they had. Well, I started watching them last week. So really, about the same time that you exited your trades on Wednesday, where's the pullback? Where's the pullback? And then you got to answer that question. Well, where's it pulling back into? And the reason why I was looking at it was because it got into that super over bought condition, started making these what I like to refer to as price relative strength divergent patterns where price moves higher and it does with less relative strength. Usually those end in some type of retracement out here. Now, as we speak right now, the 120-minute time frame that we're in, and unfortunately this doesn't end here until 12 noon, so it's hard for me to really gauge. I really need to understand what goes on during this trading session between 10 and 12. But if it were to, but right now what we did receive, can you hang on through this breakout here?
I can, Steve. Thank you.
Perfect. Okay, so we're going to go back to John in Philly. We're going to try to navigate the markets and try to identify potential areas to be watching for potential long positions inside of the NASDAQ 100, the NDX, the Qs, the NQ, whichever it is that you might trade out there. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 15. S&P is down about 5 points, 4.5 points. We're going to go back out to Philadelphia, to our man John. We're taking a look at, right now, what I've got on my screen here is a 120-minute time frame for the NASDAQ. And the question specific is, is there an area that I would see or am targeting for being able to take a long position inside of the NDX 100, the Qs, the NQ, whatever it is that you might trade out there. And right now, what I've got is a 120-minute chart on my screen. Now, as we came onto the air here this morning, or the session that completed at 10 o'clock, what we saw was a little bit of a down thrusting candle. We saw that same kind of candle formation occur on Tuesday at 2 o'clock in the afternoon on May the 30th out there. And other than that, there was some pretty decent volume behind that move, John. At 2 o'clock, there was 59,000 contracts, and coming into this 10 o'clock time frame, about 40,000 contracts. So, I don't know. We're in a super strong bullish mode right now. And the question is, are there going to be any cracks in this glass? If, in fact, it were to pull back to that 3664 level, which is only the 0.382 retracement of, and I'm only using the retracement going back to what I consider to be the significant turn in the market, which I'm using as my anchor point, the May 15th level at the 3540 area. So I'm going from that low to the high that was put in actually inter-session so far today. The one during this 8 a.m. to 10 p.m. 10 a.m. session out here at 37.4150. I'd love for it to get to 36.17. I don't know how realistic that is, but those would be the two initial targets that I would be looking for at this stage. If from a retracement standpoint, even if I got a little bit more conservative and I just went from the 2 o'clock session on May 20th up to the high that came in this morning, the dead cat bounce there takes you about 36.81. So short of that taking place, those retracements,
right?
What I have been looking for on the 120-minute chart, John, was a little lagging indicator bearish cross, and that's where the 8-day crosses through the 13. And that's what we have going on as we speak right now. But like I mentioned, I won't know if we really have that until this session finishes at 12 noon out here. If it finishes with the 8 being below the 13, then that would signal to me from a lagging indicator standpoint that we might see a bit more of a pullback occur. The one thing that we have going against us, you and I, because I'm also looking for a long position here, and I'm not sure how to deal with it just yet, is the liquidity gauge of the euro-Japanese yen, which I believe influences the market substantially. And where that had been moving lower, that had formed a 0.786 Gartley buy pattern, which right now is coming to fruition with some confirmation. And if this currency pair moves higher, we may have to buy the breakout above the high that took place at 8 o'clock this morning.
Yes. One thing I would just observe, Steve, thanks for posting that 120-minute chart on the NQs. As I was looking at that and listening to you discuss the retracement levels, I noticed or observed that since Wednesday, the NDX and the underlying index, the NDX, and the futures on it, the NQs, have been trading in a high-level kind of
sideways consolidation
pattern that Basil often refers to.
Absolutely.
I would merely observe if, in fact, buyers drive the price of this over the 37.40 level, that would also be over that March 4th high. And, of course, we've often observed prior areas of resistance, once exceeded, often become new levels of support. And so if in fact the NQs rally over that 37.40, frankly, I'll be looking to buy dips actually against that 37.40 on the idea that that prior high could be a new floor sort of thing. So
no. Now what I do have here is, and I included, there are every now and then there are certain correlation charts that seem to just work. Why they work, I have to come up with assumptions, and since I can't prove those assumptions, it really doesn't matter. I just like to know whether they're working or not. And included in my newsletter service this morning, Mastering Probability, I shared some of those longer-term looks, which those correlations are back in sync. And if those correlations continue to be in sync, this says we have a really strong summer rally that's going on. That the whole sell in May, remember, what we always have to remember is sell in May is a 6-month cycle. That doesn't mean you have to sell on May 1st or what have you. And so it bodes well, those things put together with the euro-yen, with regard to the ES Mini breaking out of a consolidation box range on its daily chart, with the Dow futures doing the same thing, it really becomes a question of where do you move in. Now, I also have another indicator that says that we should see volatility in the market pick up in the next several days out here, and so that's probably the thing I'm mostly, and that's a cycle that has worked since September of 2012, and it's worked consistently. And it doesn't mean that it can't fail, because you and I know that's what this is all of. Sometimes we buy failures, right? Breakouts or what have you, if a market doesn't pull back. So
yes.
I've got some indications that say we should sit tight. I mean, that's the best that I can. That's that's where I'm coming from. And if you miss a move, you miss a move. There's always another one out there. So I think the market looks good and strong. I think it looks good and strong through all of June. Through maybe through most of July, maybe all of July out there, maybe even into August. But I am so agnostic even when I'm in a trade. I'm willing to I wait for the market to give me information, and at this stage, my information says it's nice and long and strong, but we might, I don't know where it comes from, some nice little pullback here that we can buy into. It's either that or we've got to buy a breakout. So I hope that helps. But if you've got some other ideas, where is it that, I'll ask you this question, where is it that you're targeting for a potential pullback inside the NQ?
Yeah, I'll just repeat. I mentioned that right off the top. What occurs to me is there's a gap from last Tuesday, day after Memorial Day.
Yeah.
A gap of 36.90 down to 36.80. The NDX is 37.20 now, so 30 points down. That's also the area of the 9-day exponential moving average. So I would be thinking if I can get it down there, I'd take a stab at it. Alternatively, if we happen to rally over 37.40, begin trading up there, I'll buy dips against that 37.40 mark. So
very sound.
Thanks so much for the input, Steve. I always appreciate it. We'll take it step by step.
Absolutely. Thanks so much for calling, John. Have yourself a great Monday. Let's go out to Dallas, Texas, to our man Mike. Mike, thanks for calling. Thanks for holding. How you doing today?
Hey, Steve, I'm doing good. You always mention the Euro-Japanese yen.
Yes, I do.
As a market, to look at how other markets are going to do versus the Euro-Japanese yen. And I'd just like to ask you, I could understand a little more maybe the euro, dollar-euro, but why?
Well,
why do you look at that to give you an indication of our markets?
But now remember, but why would you say the dollar euro? You could understand, and so just so you could accept that one, but maybe not. Is that because you would more look at the U.S. dollar index or something else?
Well, just the dollar euro is so much larger from a volume standpoint than I would think the Euro Japanese yen would be.
Well, let me sure, and it's a great question, and I appreciate you listening to the shows, calling in with questions such as that as well. And Mike, do you get a chance to watch us on Tiger TV?
Yes, I do. I'm watching now.
Okay, perfect. All right, so then this will work out great. What I have on my chart here right now that we're looking at, the upper portion of the chart is the ES Mini. Well, you can do it. You can apply it against the S&P 500 and the cash basis, but it's easier since both of these, in essence, are trading nearly around the clock out here. It's better for me to just go ahead and do that. Now, what you'll see at the bottom of the chart here, Mike, is the Euro Japanese yen.
Yeah.
And if you look at the two charts, what you'll notice is the similarities from a direction standpoint. And that's really when I talk about the Euro Japanese yen, and I always have to pinch myself and remind myself that it's a directional indicator. It is not to be used as a correlation of, hey, if this currency pair goes up 1 pip, that's the equivalent of 1 tick or something along those lines. It's just I wish it were, because then we would all anyway. It's not. But from a directional standpoint, can you see the similarities? When you take a look at this chart out here?
Yes.
Okay.
Yes, I do.
And so to answer your first question, why, I don't know why. Why do I use it? Because of those similarities, which are different than if I put the Euro-US dollar chart on my screen.
Okay.
So it's the reason, because if I put the U.S. dollar Japanese yen on my screen, or the Euro-US dollar, or the pound dollar, or the pound euro, or anything else, I can't find anything that correlates so well.
Okay. So
and
this is just based on your analysis from years, and you're simply using it as a gauge. Okay, that makes sense.
And then what I've liked about it is because we learn so much from failure in life. At least I think I've learned more from failure than that then I just apply that to a stock chart or any chart. And so in this case here, there are time periods where the correlation gets unglued. It would be like, you're probably a good dancer, so if you were dancing with a girl, you guys would be doing the tango. I would get up there, and she might be tripping over me or something like that. Okay. So there's sometimes here where the market, that tango becomes unglued and it goes in different directions. And if you look at the bottom of the chart here, when the euro-yen is making a higher low, and the S&P 500 or the ES Mini is making a lower low, you've got a divergence. You've got a correlation that doesn't exist. Right. And when I've gone back through the chart over the last several years, Mike, what I find is that the euro-yen, with the exception of this time period right here that didn't work,
right,
it almost always works. And that's where I look for. That's why there's still the potential here. There's the, the euro-yen is off of the bottom. Now you got to be paying attention to patterns that are inside the market. But there's definitely been a divergence inside the direction of the euro-yen since May 7th through, let's say, today or Friday out here, in that it's been moving lower and the ES Mini has been moving higher. But what typically happens is that the direction of what the yen is telling you is really the euro-yen is telling you the correct story. Now, what it doesn't tell you is what is that correction going to be. Now, and where there's a little bit of divergence in my mind is, look, in the month of May, we cannot question without an iota of knowing that the NQ, I don't track this against the NASDAQ, I don't track this against Russell 2000. Usually markets kind of work in some type of harmony. Well, the ES Mini didn't do much on this last retracement, where the NQ and the Russell 2000 did. So does that help you?
Yes, it does. Yes,
yeah. So with regard to when I go back to it, then I like to. So I know I'm looking for where things are where there's no correlation, and then which way is the euro yen pointing, because that helps me to understand. Unfortunately, it can't be used as a timing tool, but it can be used as from a timing tool. I think you go back and you take a look at other patterns going inside, the underlying instrument. In this case here, if it would be the S&P 500, the ES Mini, if it's going in the opposite direction of the euro yen. The problem is that the euro-yen just formed a beautiful 0.786 Gartley pattern. Now, what it didn't do completely is it hasn't really given us the type of reversal signal that I like to see. Reversal signal is usually a 1, 2, 3 candle session, Mike. It's usually like a hammer candle. It's like a bullish engulfing candle, a morning star, or something along those lines, and we didn't get that. But what we did get is, if I go into the intraday time frame charts out here, and if I take a look at the 120-minute chart, it actually gave us a great reversal signal. And so I'm thinking, okay, the daily didn't give us maybe what it was I was looking for. Sometimes that's how the universe works and says you got to dig a little bit deeper. And as I dug deeper, nice hammer candle had formed in the euro-yen on the 120-minute time frame on May 29th. So I think the euro-yen is off the bottom. Is the stock market going to continue to move in that correlation? I think it will. Does that? Okay. I hope that helps you out.
Well, thank you very much, Steve.
You bet. That was Mike in Dallas asking a great question about why Stevie's son here follows the euro Japanese yen. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Wow, cruising into the last segment here. Right now, the Dow is off 19, the S&P is off 5, NASDAQ composite down 26, and thanks to John in Philly and Mike in Dallas for calling. You know, great questions out there. I had a question inside the Tiger's Den as well to ask what the correlation is between the S&P 500 and the U.S. dollar index out here. So if you're watching this on Tiger TV, the candles are the S&P 500. It's traded 1918.07 right now, and the black squiggly line on my screen is the U.S. dollar index. Now, what I've done here is I've taken the U.S. dollar index and I've inverted it, which means that because I think the assumption here is that a weaker dollar means a stronger market. So in this case here, by inverting it, if the black line is moving up, it says U.S. dollar index is getting weaker. Now, the U.S. dollar index is a basket of currencies. Six currencies make up that basket. And I know I should just keep these numbers written down. You can Google it. It doesn't change, so it's the percentages don't change inside the basket of the U.S. dollar index. The euro is the bulk of it, 57%, 52%, something like that. I think it's like 57%, 57.4, something like that. So you've got the euro makes up the bulk of it. Then you've got the Great British Pound and the Japanese yen. Those three make up 56, 66, over 75%, probably closer to 80%, not 80, but closer to 80% of the entire U.S. dollar index. And then you've got the Swiss franc and the Swedish krona and the Canadian dollar. And not to make those, insignificant, but if you can find 70% of the so in any event, so that's what's going on there. So when the black line is going up on my screen, the U.S. dollar index is getting weaker. The assumption would be that the market should be rising, right? And there are time periods where this correlation exists, but it doesn't work as well as the Euro-Japanese yen, which works on a consistent basis. Now remember, it's directional indicator only. There is no correlation in the currency moves X and the the underlying instrument, whichever you might be tracking, S&P 500 ES Mini moves so many points or what have you. You can see significant periods of time here where the correlation doesn't exist on this black line. You go back to September 2013. Now let me see if I can do this here real quickly. Let me see if I can overlay the Euro-Japanese yen underneath it, EUR-JPY. And I don't have to, let me put that down. Well, let me put that on the screen itself, on the chart, line chart. Let me put that on the chart. I'll keep that in red. I need to make that a little bit thicker. This could start to become confusing. Here we go. So you can see directionally, I don't have to invert anything. I don't have to do anything. If you take a look at the correlation, directional correlation with regard to the moves, it's a beauty. I mean, it's just simply a beauty. And I like to use a correlation where 80-90% of the time things are in sync out there. So that's to answer the question about the U.S. dollar index versus the S&P 500 versus the Euro-Japanese yen and the S&P 500. So hopefully that helps you out. And if not, we can always continue to cover that in future shows. But we won't be able to do it anymore today because our man Basil Chapman, he's in the on-deck circle. He's getting ready to come up. He wants to hit a grand slam home run. I can just feel it. So stay tuned for Basil's show. It is Marvelous Monday, Magnificent Monday. That means we got our man Larry Pesavento following Basil, Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Folks, I'm grateful for your presence here today. Have a great Monday. Look forward to seeing you soon. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.